what I'm saying is that brokers can't have their head in the sand. If they built their entire business model on doing vanilla deals, ones that a computer could do much easier, much faster, then it's not a sustainable business model. Then
so what you're saying is freeing up brokers to think outside the square. If you're just going to be someone that competes on rate and fees as a broker, you are going to be replaced by AI.
I've never seen the ATO collect as ruthlessly as they're collecting now.
Restructure is not a failure, and people need to get that through their mind. G'day everyone, welcome to the MG podcast. Today, lucky enough to be with the man himself, Julian Fayad. Everything to do with finance and AI. Welcome, Julian.
Thank you very much for having me, mate.
Mate, thank you for having me at such short notice as well, and putting on, giving me the old iced coffee. Mate, today, quick podcast, quick chat about tax debt, right? What we're seeing out there at the moment in terms of, from a broker's sense, dealing with DPNs, talking about finance options, and you know, the ability for brokers to have a solution for their clients. What we're seeing a lot at the moment, particularly myself, is that traditionally when someone had a tax debt or they're being pursued by any other type of creditor or have a cash flow shortfall, they used to go to their accountant or their lawyer, right? Their accountant or their lawyer was generally the first person they'd approach. But more often than not now, I'm seeing a lot of people going straight to their broker. And I don't know if it's because they've got property or they've got equity in their assets, but the first thing is like, right, I've got this tax debt that's been hanging around my head for a while. I want to see what I can draw out from, you know, what's my borrowing capacity to be able to draw out some cash and to pay out those loans. So is that something that you're getting more and more inquiries about, the tax debts and finance and options?
Yeah, absolutely. And I'll give you some context. I think a lot of people, the reason why they're going to their brokers now is because they really, when it comes to having, let's say, imperfect ATO tax debt, they've been abandoned by their banks. Their banks don't want to touch them. You know, they've got all the cash and all the trading history and all that kind of stuff. They're like, nah, they're almost treated like a leper.
Yeah.
And so one of the reasons why brokers have 76.8% market share in Australia when it comes to property lending is because there's no judgment. Brokers see this stuff all the time, and brokers really are the customer's best friend. They've got the client's best interests at heart. They want to see their customers succeed. They want to see them build wealth through business, through property, all that kind of stuff.
Yeah.
And but yeah, there are a lot of lenders that brokers have access to, that like the fintech lenders and the non-banks and the other products that are actually going to be more flexible when it comes to funding ATO debt.
Yeah.
You know as well, like as of July 1st, they've changed the rules on the general interest charges and the other interest charges. So people used to also go to the ATO and say, hey, we want to set up a payment arrangement because, you know, we had some cash flow difficulties and we're struggling to try and catch it up. If we put it on a payment arrangement, you know, we're going to be sort of better off and we can continue to meet our new lodgements and new ATO payments on time. But since COVID, and probably especially in the last sort of couple of years, the ATO has been ruthlessly, even with the payment arrangements, where they used to allow 2 years, now it's like 12 months.
Yeah.
Where they used to allow flexible payment terms, they're saying, no, we want 30% of the debt up front. So you're actually taking a lot of the really valuable cash flow out of the business.
Oh, 100%. And are they swapping? Are you finding that perhaps it's almost as if they're swapping one debt for the other? Right, with the like go in your payment arrangement, people start freaking out. Oh no, I've got this payment arrangement.
Yeah.
You know, I should probably have not gone into it.
Yeah.
But I'm going to have to address it and meet it at all costs, which means they're going to start. Well, hang on a second. That supply doesn't really need to be paid now. We can kind of balance this out.
But it's also like they have a 1 year payment term.
Yeah,
that's not sufficient. It's so hard.
Yeah, how long has it taken for them to incur, I guess, that liability?
Yeah. And even if it's $100,000, like no one just has $100,000 spare.
Yeah,
like that's
if they had that
flow.
be on the debt, wouldn't it?
Yeah, exactly. So you know they're asking you know sometimes 30%, sometimes more of the debt up front before they'll even agree to a payment arrangement.
Yeah.
So that's the first part.
Yeah.
The second part is now what they've done is they've basically said to business owners, we're not going to be your bank.
Yeah.
We're not going to allow you to claim the general interest charges and other interest charges as tax deductions.
And what is the rate? Do you know? I think it's
12%, 13%.
Yeah.
And so it's not even like that competitive anyway.
It's not at all. No.
And so, you compare that to sort of if somebody has some equity in their home, like that's going to be a way more competitive rate. Or even if they can get, unsecured business facility, in a lot of cases, it'll be cheaper than that.
Yeah.
But way more flexible. So, if you've had a tough time, and look, the last 5 years haven't been easy for businesses.
No.
We've had droughts, bushfires, floods, and I'm talking about all of Australia, right? We've had COVID twice, two separate lockdowns. We've had rising interest rates, cost of living crisis, supply chain issues.
Yeah,
all of that has been really challenging for businesses.
And
so putting these demands on collecting debt is really, I believe, it's a ruthless act.
Yeah,
if they were a private entity, or let's say they were a publicly listed company, what they're doing, you would say, is absolutely genius.
Yeah.
But the fact that our government and a government organization, our tax revenue department, is collecting debt so ruthlessly off businesses now and making these changes to not being able to claim the interest charges. It's a little bit upsetting. We work with small business, and you see it all the time, right?
Absolutely.
And sometimes we're dealing with the people who are taking out debt in their business. Sometimes it's for growth, and sometimes it's really positive.
Yep.
Sometimes it's just to get them out of like a little bit of a sticky situation. So what the ATO is essentially doing by making that change is they're saying, we're not going to be a bank. Go and get debt from somewhere else. That will be tax deductible. And essentially now they're outsourcing the debt
to
other banks, other non-banks, other lending institutions. So they'll get their money up front, because if, let's say, they take out, let's say a business owner takes out a loan with a non-bank, they'll get that money and pay down the debt to zero. ATO gets their money in full. Now it's
someone else is wearing the risk.
Someone else is wearing the risk. And the way I see it is they're doing that because some people are negotiating and entering into SBRs and giving them 30 cents on the dollar or whatever. So they're trying to get 100 cents on the dollar, where people got sort of more significant tax debts.
But it's interesting, right? And it's funny, you've touched on a couple of points there that I want to address. Firstly, about the banks and being a little rigid in terms of dealing with tax debt. Firstly. Right, but secondly, and probably a segue into what I'm going to get on, is the fact that during COVID, people forget about COVID. There is still a lot of COVID debt around, right? A lot of it. Oh, COVID was when? 19, what are we now? 6 years ago or 5 years ago, right? No, the legacy debt is still there. So this legacy debt a lot of it is built up, where over the period of, I think, from 2020 to 2023, a three-legged cat could have called the tax office and got a payment arrangement or what have you, right? Or, hey, I'm having trouble, don't worry about it, sit up there. And so the debt was accruing and accruing and accruing. And then all of a sudden, they're like, bang, we want this money within 28 days. And, like, I've had people come to me and say, mate, how can you expect me to do this? I've told you I've had issues. Right, I've told you that. You've continued to allow me to continue to trade, do your payment arrangement or just lodge a form, stay there, because they wanted to preserve jobs at the time as well, right? Everyone did. No one wanted to lose their job during COVID. And then to actually then hit people up and say, rightio, that debt that you've accumulated over a period of 18 months, we need it in 28 days. Impossible. So the first thing that people are doing is, well, I don't really have anything. What do I have? I have my house. So am I going to take a loan out from the company and use my house as security, right? And then coming to your point about, well, then they go to their broker, these traditional kind of home loan mortgage brokers, which is fine, and they have a place, right, for you. And so that's where you're just like, right, well, are the banks more focused on the institutional banking and not so much in line with the small businesses, but is the majority of my clientele and my work, and I dare say a lot of yours as well, right?
Yeah.
And that's where these non-banks and even some cases the cash flow lenders and private lenders, come into it. Guys, brokers, there are options out there. Don't just get used to the 4 or 5 big banks on your panel and say, I don't have an option for you, because you do have an option for you. You just need to look for it, right? And there are people like your firm, LoanOptions.ai. There are even some other brokers and some people who are specialising in dealing with this debt. So what I'm saying is, it's different times. It's not the same time as it was before, where we're dealing with some small cash flow issues. These are big gaps of legacy debt we need to deal with, right? And generally speaking, the only way that the money's going to come out is by, using the equity in their home to pump into their business. And don't often just go straight to the big banks. Go to the non-bank lenders. And I find the reason why, this is just word on the street type of stuff, right? People talk to me all the time, mate. My phone just does not stop, right? For a chat, chin wag, I go on tangents all the time, right?
Yeah,
but it's just opinion.
Part of our job is actually being a psychologist too,
It
right?
is, a sounding board.
Yeah.
And I promote that with anyone. I go, but that's the thing, like reach out, find a solution for your client, because if you don't, you're going to miss the boat. And there's going to be a lot more of this distressed debt to deal with moving forward, right?
Yeah. No, that's right. And I think a lot of people don't know that some of the lenders, like for example, if you were in a bad situation and you spoke to someone like yourself, and an SBR is a really good way forward, and in a lot of cases it actually can be. A lot of people don't know that in order to get an SBR, you actually need to have all your entitlements, super, all those things need to be up to date. And you won't be able to enter into the SBR until those things are brought up to date. But there are lenders on our panel where we can actually obtain funding, right, so that it can bring all your entitlements up to date. Then you can enter into the SBR. After the SBR is sort of in tow, you get to, and I'll let you explain that part, but you can negotiate the tax debt down. What do you normally achieve for your clients?
Look, we can't do a general run of the mill, right? But what I can say is it started rather low, like it was 10, 15 cents in the dollar. For me, if the alternative was a zero return in a liquidation, I wouldn't be suggesting anything under. It'd have to start with a 2 or a 3, in my opinion. And if you want to be successful and you want to be able to sell your story correctly to the tax office, that's what 20, 30 cents. But again, every situation is different.
It's different, yeah.
And if you've got circumstances that aren't favourable to the tax office in assessing the criteria or approval thing, it can be negated or sweetened, with a better return, with a provide more comfort to the tax office to accept it. But yeah,
when they go through that process, they get a more manageable tax debt.
Yeah,
could be 30, let's, for argument's sake, say it's 30 cents in a dollar.
Yeah.
Now they're on the pathway to make good decisions moving forward, and we can structure a debt once all the entitlements are up. You can structure a debt to actually get that ATO their money,
100%.
and then you move forward and you can pay that loan of maybe it could be 2, 3, 4, 5 years even. So,
absolutely, yeah. So
a bit more breathing space than the ATOs.
It's breathing space, but it's not throwing good money after bad. Yeah. You're essentially stopping the hemorrhaging of the business, right? So you're like, you know what? I'm going to put an SBR, small business practitioner. Yep. That debt's now going to crystallise. The interest isn't going to continue to increase. So I know what I'm dealing with. Then I can do a 30 cents in the dollar return, for example, 40, whatever it might be, to the creditors over a period of, I think it's up to 36 months. It is up to 36 months. Very rarely would I push out a 36-month payment. Maybe if it's paying 100 cents on a dollar, maybe. But the longer it goes, the more risk there is, right? So, and therefore you can fix your business. You're not having to use the good money to address legacy debt, and then you can move forward, with prosperity as well and confidence. But you just touch on there having the solution where you have like access to lenders who will provide you with finance to pay out if it's your outstanding SGC or superannuation, right? Plus assist in paying the fees for the small business practitioner.
Yep.
And then also put forward, you may not need to do a payment out of the future profits, right? So you could do a lump sum payment, right?
Yeah.
Right?
Yeah, and they've decided that their business model is not to set up bank accounts. They realize that there's already a bit of a monopoly on that.
Yeah.
And so they've focused their energy, time, effort, resources into providing loan solutions for clients instead of the whole banking suite of products.
Yeah.
A lot of those non-banks still have offset accounts, still have redraw accounts, still have those things.
Yeah.
So to your point, they are like banks. They are effectively banks, but
that's interesting.
Just able to be more flexible than
Yeah. So you're seeing, when are people coming to you? When are you finding the catalyst, so to speak? And that goes out to old Stephen Michaels, right?
love Stephen Michaels.
Yeah, what a legend. what is the catalyst for people to approach you for assistance with restructuring their debt or wanting finance? Is it a DPN?
Yeah.
Are they receiving DPNs? They are.
Unfortunately, sometimes they're coming a bit too late. Obviously, it's really, these things are really hard to admit. It's really hard to have a conversation with somebody and tell them that you're in some financial trouble, or the business is not doing as well as you'd hoped, or the market's a bit tough and you've sort of let things slip. And so, unfortunately, sometimes they come to us when there is a DPN issued, or they're getting warnings.
So are you, okay, that's a good point. Why are they coming to you late? Are they coming to you late because they haven't received the DPN? Have they just ignored the DPN? Is it a fact where it's reactive in the sense that, hey, I try to go to my traditional broker and I've got this thing on my tax portal that says DPN and it's preventing me from getting finance? How are you finding it? And there's a reason for that question. Why is it late?
It's hard to know exactly, but I'd say there's a few people that fit into each of those buckets. But what we're seeing is that a lot of the time it's just a bit of head in the sand. Like it is.
Yeah, it is. There's a lot of
it's
that.
like a mental block that they put on that, because it is a really difficult thing to deal with and admit to yourself that, hey, like, I'm in this situation. That's a big number that I now owe to the ATO.
Yeah.
So,
and probably too, right? Sorry to cut you off. They might also still have the mentality that they had during COVID and said, oh, it's a tax office. They didn't do anything for the last 5 years. Oh, what's this going to do, right? Do you know what I mean?
That is true. That is true. They were like quite flexible through that period, but that time and place is now well and truly gone. I think I've never, in my career, I've been doing this for 14 years, I've never seen the ATO collect as ruthlessly as they're collecting now.
Yeah.
And the director penalty notices, like we haven't really touched on that, but I'm sure in a lot of your podcasts you talk about this, but like that could mean that it means that the director's personal assets can be seized, can be liable.
Mate, it could go all the way to bankruptcy.
Yeah.
And that the tax office have the ability, like it's a debt, mate. And you know what? It's not like a debt that after, a statute of limitations, for example, after 7 years you can no longer, don't quote me on that, but it's about 7, you can no longer chase.
Yeah.
This is a penalty. So it stays with you for life, mate. It will even, without scaring people out there, it could form, if and when you pass away, God forbid, it could form part of your deceased estate, yeah? So it affects your children.
Yeah.
It's crazy, right? And so this is leading to the point of why are people coming to you late? And I'll tell you one of my reasons why they're late is because people do not update their personal addresses on the ASIC register, mate.
Yeah, that's happened.
Right?
Yeah.
And they're like, oh, I've moved house. And I've told my accountant, but mate, you haven't updated on ASIC, and it is a director penalty notice. So that penalty goes to you, Mr. or Mrs. Director.
Yeah.
And so it's up to you to change it. So when they issue the penalty to you, they're going off the whatever you've got written on ASIC. And for you to say, that doesn't stand because I've moved house.
Yeah. Or it went to my accountant's office and he didn't pass it on to me.
Mate.
You have to take
a response.
personal accountability. Yeah, you have to take personal accountability.
The other one, mate, I'm telling you, I have this chat, I reckon, twice a week. Mate, the company bank account is not your bank account.
Yeah.
Yeah? But that's a different story.
Sports bet coming out of it.
Yeah, sports bet. What?
Yeah.
That's a loan. But that's for another day, right? So update your register. Telling the tax office that they can't pursue your DPM because they sent it to the wrong address is not a valid excuse, mate. The only way that I've seen anyone get out of a DPN is when they've incorrectly been allocated or assigned to be a director of a company, right? And you actually need to change the ASIC register in accordance with that.
Yeah.
The tax office won't look at anything other than that. I'm not suggesting you go and do it. What I'm saying is it is incredibly rare, almost impossible to get out of a DPN once it's expired or issued.
Yeah.
So take action.
And I think a lot of people, you spoke about there should be a course. Absolutely. Even just provisioning money. Like how many directors just go, 100K to like you should be provisioning money as you go. As revenue lands in your bank account, there should be a second bank account that's linked and inside to zero, and the money automatically pushes there. And you probably shouldn't even have easy access to that account.
No.
Because like it's easy to think that that's your money, but it's not. And
and you're saying like put the provision aside for GST, PAYG.
PAYG.
I mean, your super's going to be
Super.
paid. Well, now there's another cash flow issue, right? Is
Yeah.
it the same day super? I should know this.
Yeah, I'm not sure when that comes in though, but yeah,
Soon.
yeah.
Payday super.
Payday super, right? And it's like the day you pay your wages, you pay your super. There's another a cash flow issue.
Yeah. It's and the super rate's going up as well. You know, a couple of days it'll be 12%. You know, it's
So we work for the tax. And we work to pay for the tax.
I've said that before, and it's you know, when you
We don't want to go
people
into the tin addy.
right?
We don't want to go into the tin addy. With all that in mind, mate, you need to respect the integrity of the tax regime. Okay, whether it's fair, whether it's not, it's the rules, man. You know, we do live in Australia. It is a beautiful country. You've got to abide by the rules. And if you are struggling to pay your tax, or if you're finding it's just too much, there are options out there. Loans AI, mate. Kind of the name says it all, right? Really, it does. And what I'm seeing out there a lot is the traditional brokers. Right, we've got enough competition as it is, yeah. And what people fail to understand, brokers, my industry too, accounting, well, insolvency, not so much at the moment, but it will. You know, AI is creeping up. So, something that is incredibly efficient. Fast moving, turns things around a lot quicker. And the same goes with finance, mate.
Yeah.
You know, and if you're just going to be someone that competes on rate and fees as a broker, you are going to be replaced by AI. Yeah. You need to pivot. And we're seeing a lot of that. And I'm not suggesting you're taking over, but what I'm saying is that you're taking advantage of the technology out there to make it easier for Australians to find finance.
Absolutely. A lot of people said that, people just really want to get help from a broker. And they like the fact that brokers get them outcomes. But if technology can do that, and it can do it at 10 times the speed in terms of faster speed, or maybe even get them better results because it's privy to information that maybe the human isn't, then that's what they'll do. Humans like convenience, they like speed, and they like outcomes. It's the same reason, if you just rewind a little bit, a lot of people said, I would never do my internet banking online. I'll never trust that. I like my branch manager, Jane, down the road. I'm always going to go and see Jane. As soon as internet banking was an app and really convenient and fast and easy, no one goes to the branches anymore. That's why, one of the reasons why so many of them are closing.
Yeah.
And, so brokers, what I'm saying is that brokers can't have their head in the sand. If they built their entire business model on doing vanilla deals, just the easy, straight up and down, no questions asked deals, ones that a computer could do much easier, much faster, then it's not a sustainable business model. I'm not saying it's going to happen in 12 months.
No.
But, I've predicted that on the shortest time horizon, within 3 years, 80% of them will be, of the vanilla deals will be handled by AI.
Yeah.
On a medium, and where I think will be most likely be where it lands is within 5 years.
Okay, yep.
So where does that leave? It doesn't mean that brokers won't exist. I think as long as they don't have their head in the sand, they try and adopt these tools and technologies. Brokers will actually have the AI technology to write those deals really fast. And make sure that there's enough competition to keep the banks honest.
Yes.
Brokers that play a really important role. And I know the banks have been doing a lot of propaganda recently talking about that customers would get access to better rates if they could cut the broker channel out. And that's just absolute garbage. Competition drives pricing down.
Yeah.
Obviously, that leaves the edge cases 20%. Brokers become more valuable.
Yeah.
So here's the thing. Some people go, you're trying to, make the brokers obsolete. Like, we're building amazing tools and technology. We have brokers in our team. We've got 20 something brokers, and we're not trying to make their jobs obsolete. What we're trying to do is make each one of them help more customers.
Yeah.
And
I
save
agree.
people more money.
100%.
So, we don't want them to be doing the vanilla, boring, black and white stuff. We want them to be handling the really complex scenarios. That's where the human can add a lot of value. So the tech will do the easy stuff and it'll do it at lightning speed.
Yeah.
And then
so what you're saying, it's freeing up brokers to think outside the square
and help their clients get out of these difficult tax situations.
So all that kind of process stuff and submitting and whatever it is, right? Your tech will look after it. Okay, guys, we've got that. What used to take you 2 or 3 days to do, we've got that in literally seconds.
Yeah.
Now, you know what? Let's use your brain to learn and to come up with other solutions to actually provide a better outcome for your client.
Absolutely.
Yeah. And that's how you got to look at it. It's not a threat. It's a tool. right?
It is a tool. It's the same way people were threatened by the internet, and the people who didn't adopt and do online
how old are
stores
you?
and 32.
32, yeah. I'm 41, right? Yeah. But I remember the Y2K bug, man. Yeah. And we were sitting around.
I remember that too. Yeah. I was worried. I was at that age. I would have been 8 years old, so I was more worried that I was going to ruin my PlayStation.
Oh, your PlayStation? Yeah, it was my 5210 or something, bro. Yeah.
So, but yeah, look, that's my take on it. And I think if you look at what is happening in the AI space, it's rapidly changing. It feels like every single day there's a new model released or there's a new technology released, and people just have to be doing their best to keep up with it and try some of these tools.
Yeah.
The one thing that's very concerning is the amount of people, brokers, other industries that are putting their customers' data into those free or consumer paid versions of like Chat GPT and the like. Right. You absolutely shouldn't be putting your client data or personal data into those models. If you are going to use those tools, and we use them, you have to have what we have, which is the enterprise version.
Right.
It costs more money.
Yeah.
But
so that's a product of yours, is it? The enterprise version?
No, like
forgive my ignorance.
Like say Chat GPT.
Oh, okay,
yeah,
sure.
They have enterprise versions.
Mate, I just logged onto that the first time last week. It's fantastic.
It is great.
Yeah.
You've got to have the enterprise version so that way you can have the data retention policies updated so that it's not training any of the models on your client's data and you're not like it can terminate the data within a certain period and stuff.
Yeah.
So those are some things that I've seen that are a little bit concerning. The amount of brokers that tell me they're on the free version and they copy and paste some of their client data and say, write notes about this client file, and they've basically given the whole client's personal information to the AI, which that means that it can be trained like.
Yeah, and it's not intentional, right? It's just a lack of understanding. Yeah.
But so that's sort of the darker side of it, where there's some potential risks with AI, people's data being shared when it shouldn't be, or with the wrong models. But there's so much upside. Like you can, we're building AI agents at the moment in our business, and we'll get to the point where each one of our brokers has a team or a swarm of AI agents that function as like subordinate team members. Like, they're
understood. Yeah, 100%. Yeah.
You've got a team of broker support, but they're just agents. They're not people. And our intention is not to make our entire team redundant. That's not what we're trying to do. We're just trying to make them more efficient.
Yeah.
And as we continue to grow our business,
it's funny you say that, mate.
Keep our headcount fairly
it's funny
static.
You say that. As your business has, I've known you for a while now, and as your business has progressed, in fact, you've put more people on.
Yeah, that's right.
Isn't that funny?
Everyone's
exactly like, it's replacing. No, it's actually creating more jobs for brokers. Yeah, that's amazing. I didn't actually think about that. Yeah, so.
Yeah, it definitely will. There'll be other opportunities that we probably didn't even know about.
Yeah.
It's the same thing with like, if you fast forward, let's say 3 years.
Yeah.
There's going to be roles that we can't even comprehend available.
Yeah.
And that will be like, there's a full-time. Because like before there was no such thing as a prompt engineer.
No.
And now there's a full-time role.
God,
they get
you
paid
really
very well.
do love your AI, don't you?
The full-time jobs are being prompt engineers, which is just like learning how to get the best out of the AI LLMs,
Mate, that's mind-boggling, that stuff. It's actually it's scary when I think about it anyway, mate, being a dinosaur. So, but Jules, another thing, mate, with brokers. So, okay, another thing is, okay, we're going to do an SBR. We're going to do a refinance for a non-bank, private lender, something like that. So two things. One, if they're in trouble, can their broker call their non-bank private lender and ask for help or assistance? And two, should they be checking in with their client to make sure that they are in the best product? So, for example, the circumstances at this particular point in time, you're in trouble, you're in distress, right? This non-bank lender, this private lender, whatever you want to call them, right, is willing to give you cash so you can work through and get out of your hole, right? It might be better off now they're bank quality, right? Might be a situation to look back in and then put them into a different facility. Don't let them sit there. Like I've seen some that have just gone, straight into this non-bank lender, same day lender or whatever it is. And they've had this facility for 3 years paying something like 30-40% interest. So the first thing is, should a lender continue to check in to make sure that the client is broker, that their client is in the best product possible? And secondly, if they are in a bit of strife, can the broker call up the lender that they've put them into and say, guys, we're in a bit of trouble here. Can you work with us? Will you accept a certain amount to pay you out. So perhaps, these we can take the noose around their neck.
Yeah, absolutely. And here is the same principle applies with the ATO. Everything is about communication.
Yeah, it is.
If you've got your head in the sand, and you don't communicate with the lender or your broker, who can communicate with the lender on your behalf, then what's going to happen is the lender's going to assume that you're ghosting them, and they're going to basically set in play debt collection.
Yeah,
that process of like finding out exactly where you are, why aren't you answering their phone calls, all that kind of stuff. And that's where it gets really, really stressful. And there's people that, causes issues with their marriage and all kinds of things. So communicate with the lender. Don't be embarrassed to say, I'm having a tough time.
Yeah.
I will get through it because X, Y, Z coming up to the busy
season.
Give them confidence and work with them. They might negotiate with you to extend your loan term, and that lowers your repayment and therefore lowers the burden. Other things that you could do is look to refinance a debt and maybe take it to another lender with a different structure. So the broker can help you. So too can the lender. The lenders will work with you. Just communicate with them. Make the payments on time where you absolutely can. If you miss a payment, make it up as fast as you possibly can and communicate with them.
Yeah.
And it's the same with the ATO. What happens is people, they'll start to lodge late because they're like, well, if I don't lodge, then that means I don't owe the debt. But the reality is that that's not how it works.
No.
And if you want to get favorable terms in negotiating a repayment arrangement with the ATO, one of the conditions is you continue to lodge on time.
Yeah.
And they'll look at that way more favorably.
Well, that is in fact a requirement, at least a qualifying requirement for an SBR. Your tax lodgements need to be up to date. But what people don't understand is there's one thing qualifying for an SBR. It's another thing actually getting the tax office, who is, I think, 90% of the time the largest creditor in most SBR estates, for them to agree to your proposal. The tax office look at, the first and foremost, they look at his director loans, I dare say, right? This could swap in terms of priority, but if there's been money that the directors have drawn out, right, or paid themselves at a time when the tax debt was increasing, so they don't like to see that, and you want to have a pretty good reason as to why that's happened. The other thing is compliance. You're not compliant. You haven't been lodging on time. You've only actually started to lodge because you want to do an SBR. So a big thing, and I had a good chat with Gary Busby not long ago at the tax office, who does, who from what I understand, heads up the SBR team. And he's like, interaction is what the tax office wants. We don't know what you're thinking. Yeah, we don't know what you're thinking. So if you don't lodge, you don't tell us where you're at, how can we work with you? How can we see where you're at? And of course, we're going to have to think the worst. And the same thing goes with your lenders, right? So, and if there's never been a bigger reason or a kick up the backside to start lodging, right, then now with all these DPNs being issued, mate, you don't lodge. You lodge your BAS in excess of 3 months from the due date. That BAS statement, the amount that's due and payable with respect to that quarter or that BAS or whatever that month, add it to your personal asset and liability position, mate. Yeah, right, it's as simple as that. So lodge your BAS.
Yeah.
Right. Report it. So
what about in terms of there's a certain point in time where people might go, okay, how do I go payment arrangement versus entering into an SBR? Do you see there's a point or a cutoff where it's like,
well, I do. Yeah. I do. And this is something that comes up a lot. People call me, I've got so I ask these questions, right? People are like, you should, practitioners, and I know I'm not a liquidator, right? I'm someone who's very well established in insolvency. I've done it forever, but I'm not a liquidator. But they go, I've gone to the liquidator, or I've gone to someone, and they've said that I'll enter into an SBR, and it will take the personal liability component out. I go, mate, it's late. So, no, you're already stuck with that regardless. Secondly, they say, we got this DPN within the 21 day. Or we got the DPN, and within 21 days, we entered into a payment arrangement. We spoke to an advisor, and they said, leave it with us. We'll put you into a payment arrangement. Now, when they get a 21-day DPN, and there's legalities, there's a lockdown. So if you lodge late, it's a lockdown DPN. You're already personally liable for that debt, okay? And if you lodge on time, the tax office has to give you 21 days to deal with that debt before you become personally liable. Now, that's not technically correct, but that's how the everyday layman's terms you need to look at it. To deal with it, right, you've got to either pay the debt in full, ain't going to happen because you would have done it already, point an SBR, point a liquidator, or point a voluntary administrator, right? You don't see on there enter into a payment arrangement with the tax office.
Yeah.
So people go, don't worry about it, man. I'll just call up, get in a payment arrangement, and that'll go. The people at the tax office, I don't think they're obliged to say, hey, by the way, yeah, you've got your DPN, but this isn't going to extinguish your personal liability. So people, they tell the taxman what they want to hear, so they get the plan, and then 3 months later down the track, right, they fall over. They can't comply. Oh, I need to appoint now. Well, guess what? You didn't appoint. You didn't do one of the 4 things within the 21 days. So now that you can't fulfill that arrangement that you've put forward, the company's going to go in. You might do an SBR or liquidation and compromise the tax debt, but the balance, whatever's not paid during that external administration, is coming back to you. That's your debt.
Yeah.
So is there a fine line, mate? If you can pay that tax debt in full, pay that in full first and foremost. If you have the ability to do it, 100% go. If you don't have the ability to pay the tax debt in full, mate, look at a restructure or look at doing one of those 4 things on the DPN, because if you're unable to fulfill a plan going forward, right, an informal ATO negotiation or payment arrangement, that debt is yours.
Yeah.
I just want to touch on another point, is that, and I don't know if you thought about this, but the SBR report, the proposal report that goes out to the creditors, and if it is accepted, right? I touched on with good old Stevie Michaels, mate, absolute legend of a bloke, right? Not long ago about credit rating, right? Because a lot of brokers are telling their clients, don't do an SBR because you'll never get finance ever again, right? And I don't know where they've heard that myth from, and if they are getting that response, I'd suggest you go and see another broker. But in any event, he's just like, what Stephen said to me is that once the SPR report is there and it's done, that's actually a vote of confidence to your next lender. So let's say, you know, saying before, it wasn't the cheapest lender, but it was a solution for the time. Provided a solution, right? It's a bit more expensive. But once that report goes out and shows it's compromised, then that report you can use to put towards, let's say, a non-bank letter, let's say MA Financial, let's say Pepper Money, someone like that, right? To say, here's the situation, this is why it failed or was in those issues. It's restructured its debts, right? It had a small issue, it's restructured debts. It's wholly effectuated the plan. And then take this to read this to give you the confidence to finance them. So in fact, not only does the SBR get them out of problem, right, but it actually is used as like a report, a selling report to your next financier to say, believe in this company.
Yeah. I think it's the temporary pain, right?
Well, yeah, but a professional, an insolvency practitioner, a professional, and the tax office believes in this plan, believes in this company, and guess what, Mr. Non-Bank Lender? We want you to do that as well. And they will, and they're starting to do that.
Yeah, a lot of it is because it was pretty new, and as lenders, a bit of like risk off, you know, like not wanting to, you know.
It was negligence. No, negligence. It was, people didn't know what an SBR was.
Yeah.
They still don't.
No,
a lot of people.
Right. Yeah, a lot of people don't understand.
It's not mate. Do you know what like everyone says a restructure, mate? Do you know how much? One of my other podcasts, I said this thing called restructure. Right? I think it came out on a lot of the stuff, and people are just. I've been walking down the street and people in yell at me, restructure. But guess what? It got people talking. What the hell is restructure?
Yeah.
Right. What is it? Look, mate. The majority of people that I deal with, right? They're everyday Australians out there. Some of them are tradies, some of them run restaurants, but they don't use technical terms. You know, we get people in my industry, and they're in suits and ties, and you know, you ask them an everyday question, and they respond back to you quoting the act.
Yeah.
Where's the miscommunication here, right?
Yeah.
So for me, what a restructure is that you originally entered into an agreement or terms with your supplier or who you owe money with to, right? And at that time, you were able to meet those terms. But all of a sudden, something's happened. A one-off event, let's just say, for example, where you're a one-man band, yeah? You're dependent on one supplier, or let's just say you're a chippy, yeah? And the chippy is dependent on what he gets all his work from a builder. That builder then falls over, right? And then he's not getting paid from that particular builder. So there's a domino effect, right? He can no longer pay that. But he goes through an SBR, right? Because he's like, I had all this debt, but my circumstances have changed, right? Out of my control. So I don't want to fail. I don't want to fall over. I want to get a return to creditors. I want to get as much back as possible. The only way I can do that is through a small business restructure. Yeah, and he's found someone else to do his work going forward. So that's a restructure. You're changing the terms of your trade to that you could once honour, but because of a particular outcome or something adverse that's happened to the business, your circumstances change, and you want to be able to change those terms to meet your current financial circumstances. Yeah, so as it stands now, whilst that I was going to pay 100 cents on a dollar, I can only afford 30, but I want to get something back, pay them, and then I want to actually move forward, and I'm going to base my business, my dealings, based on the current circumstances.
Yeah.
That's a restructure. That is not a failure, right? Restructure is not a failure, and people need to get that through their minds. Yeah, I hope that rant kind of made sense.
That's good. And look, I think the alternative is they get 0 cents or a cent in the dollar.
But it's not premeditated. It's a result of your financial circumstances have changed. Right.
Yeah.
At that time it was great. Something's happened. It's out of your control, and now you can only afford this. Yeah. And you know what? They could do the easy option. They could liquidate and move away, but no. They want to get something back to the creditors, and the creditors want something back.
Yeah, absolutely.
Solution. What you got any questions for me, mate, in terms of
where do you think we need, how do we see the ATO loosen the noose, so to speak? Like where does this end up if they continue to?
I don't think they're going to loosen the noose, mate.
Yeah.
I need to say this before I forget. People say that, interest rates control inflation. Do you know what I think was a real kicker with getting the inflation down? Was the tax office being incredibly aggressive in chasing their debt. So people fail to think that this could be some tin hat theory of mine as well, but interest rates were good, but it wasn't bringing down quick enough, right? Because people were still spending. All right, and then the tax office is like, well, people are spending, but there's all this debt outstanding. Yeah. So let's get on the front foot and be incredibly aggressive to remind people that, hey, you're going to go out and buy a new car, or you're going to go do this. You got a tax debt here to deal with. Not only were the interest rates low, but people didn't have to pay tax. So of course they're going to spend that tax money on other things. Oh, let's build a new house. Let's get a new balcony. And we've only got so many builders. So what does that do? Increase the prices. Yeah. So there was the increase the interest rates, let the Aussies, the small guy, so to speak, pay the price. But then let's also come on this angle and absolutely screw them on the tax that we allowed them to build over so many period of time. It's just,
Well, so we have a business in New Zealand as well, and I think the way they do it is way easier to manage, just speaking objectively here. You get SMSs when a new payment comes in, and they're smaller. And so, you get notification, this much is built in. You can just, from there, just connect your account.
What? Something so simple and could be so effective. I didn't even think of that.
SMS and an email at the same time. You go in, you log into the portal. It's easy to log in. You don't need 100 different MyGov ID, blah, 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 all this stuff.
Or when you log into Instagram or something like that, it should pop up.
For example, if you're a lender, and we see this with our customers, and I have some car loans as well. We've got some company cars and stuff.
I've seen your car, man. Yeah. I like your car.
Thank you. The Everest, you're talking about?
The Everest is matte. I like the matte black.
Yeah. So I get an SMS that tells me payment's coming out tomorrow.
Yeah.
And it just if I need to move money around, I can and whatever. But it's that SMS is just a nice little reminder. It's
hey,
very
Jules, maybe we're onto something here, mate.
Yeah.
Hey?
Tax debt reminders with SMS. But
what do you reckon?
I think a small thing like that.
Need
hey,
finance?
your PAYG account has now hit the threshold of 10K, which is where you set the reminder. Click here to
it would be
down.
Another interesting one. Probably a little too invasive, but with super. The employee gets a text saying that your employee hasn't played super.
Yeah. I think there'd be a lot of.
Who's coming to work the next day?
Yeah.
You know what I mean? And super is employees' money. Yeah. It's not the company's.
Yeah, of course.
So people don't realise that. Oh, I've got a super debt. Yeah, mate, you've been spending your employees' money. Like one thing. But don't get me wrong. You use the ATO as a the fifth largest bank in Australia. Shouldn't do that, right? But let's get down to the people that actually make your business turn, and you're not paying their super, and they don't know about it. You're taking advantage of that. That is their cash. That's not yours.
Yeah.
But yeah, send a text to them. Hey guys, your super hasn't been done. Straight up to your boss.
Yeah.
Boys, what's happening?
Yeah, I think that would
Rather than this payday super and cash flow, that would be one thing where they could use the as part of their cash flow to begin with. But they're also mindful that if they don't pay that on time, so it comes down to your, what was that, those accounts where you put it in at on the side? Provision account, right? Yeah. The provision account. They know that, hey, yeah, we might be able to use this for a time being, but if it comes time to be paid, and I don't pay that on time, so you've got to actually prepare for that. The employee's going to get a text message to say he's not getting paid. Guess who's not coming into work? Guess who's going to be on the on the front foot to pay it?
Yeah.
Again, I've met with some people from the tax office recently, and I think the tax office is making some real inroads to try and get on the front foot and be proactive. Like this gentleman that I met, I spoke with yesterday, Gary Busby, previously in insolvency. He knows what it's like. He understands it. He is a fantastic addition to the tax office, right? Him and his team. Right, they're commercially minded. They understand the background. You've got people in there who've worked in it, who stood into the shoes and can understand it from two sides. Not someone who, could potentially just, who I wouldn't say be on a power trip, but I'm the boss and I do this and I do that. No, you've got real people in there looking at real situations. So I think it's something that's going to take time. But I whilst it might not seem they are listening, I believe they are, and I hope that they're making change and considering these things, and hopefully with the use of AI, that they'll be able to improve things. And do you want my honest opinion, mate? With all this data matching and the tax office and anyone really, let's face it, their ability to obtain data. I don't think people in 5 years' time, 10 years' time, you're not going to be able to run up a tax debt. Right?
Yeah, they're going to take their money as soon as they can. And that's kind of what New Zealand does. That, to be fair, maybe that's why I like it, is because I like it more, is because you never see a massive bill in the New Zealand pool,
No.
you know what I mean? It's always like they're collecting the money quickly.
Yeah, yeah.
And so it never really, like if you're paying a couple of grand here, a couple of grand there, a couple of grand there, it's like,
yeah,
it's never allowed to build up the way.
Yeah, and let's hope that. And what you're saying is it's the true position. So they're letting people get away with a couple of things, perhaps over here to try and win power or to make it look good for a period of time. And then once it's there, slap them.
Yeah.
Bang. Where you're saying, look, it's much more even. People know where they stand.
Yeah.
They're using the right sources of media to get the message across, and we need to do that as well. Yeah, yeah, mate. Really
Thank you very
good,
much, mate.
I reckon we should do this because you know what, we'll see a lot of you and I are both on the front line, right? We are front line, and even though I'm a director and all this stuff, mate, I still go out and door knock, right? I do 5 to 10 door knocks a week. I'll go out and see someone, and a lot of my stuff is Western Sydney based. I'll just, if let's say for example, I grew up in Cabramatta, Liverpool, those areas. Often I go out there, and if I drive past a shop store or I see an account, I will go in and knock on the door, say g'day. A lot of them will tell me to jog on. Some of them will say, hey, you know what, thanks for popping in. No one comes in and sees me. But guess what I see there? Not only do I get thank you for coming to see me, but I get the real raw war story.
Yeah.
Do you know what I mean? Not from an accountant to a lawyer to a partner straight there. And so what I guess I'm suggesting is maybe we should do this fairly regularly, because we're always finding out more information and things are always evolving. And with that, hopefully we can spread some news out there and get it out quickly so people can take advantage of that.
Mate. Yeah, thank you very much.
Yeah, good on you, man.
That.
Really good on
Thanks,
you.
legend.
Cheers, Jules.